So, the green light means that my mic is on and I need to stop with all the profanities. Welcome back from the break. We are very excited now to go into this BioStock Life Science Summit's final panel discussions. And I need to start with an apology, of course, to at least one of our panel members here, because obviously, since Sweden is not part of the World Cup in soccer, we didn't expect Denmark to play a game at this exact time. Then again, no one expected them to make it this far in the tournament, so I think I should be excused. We are going to talk about attracting venture capital in the market downturn, which we have talked about a lot over these 2 days. But there are obviously lots of challenges in this situation, but there could also be opportunities. And I'm hoping to hear from these distinguished experts in exactly this topic, venture capital. So I would like to start with a short presentation round where you each can present yourself, talk a little bit about your fund and perhaps your fund's latest investment. And I will start here, closest by me, Peter Wolpert from Industrifonden. Welcome.
Thank you very much for inviting me here. So very briefly about my background. I'm an entrepreneur. I built companies, and primarily in life science, but also in tech, and took companies from 0 to about 500 million Swedish in turnover, brought companies public, and also sold companies to US private equity. Half a year ago, I started as the new CEO at Industrifonden, and it's a lot of fun. We look at all the fun innovations that are being developed in Sweden and in the Nordics. We invest in 3 areas: in life sciences, in deep tech, and in transformative tech. And we have a rather extensive portfolio. We have more than 50 portfolio companies and about 5 billion Swedish under management, and a lot of dry powder, which is good at this time. And when it comes to our latest investments, we made 2 life science investments this fall. One in anacardio, heart failure therapy company, and a very recent one in GARD Therapeutics. And that was a little bit unusual for us. We focus on venture, but GARD was actually a public company. But in a very specific and exceptional setting, we found it to be a very attractive investment opportunity. So that's briefly about us.
Thank you.
Thank you.
Tobias,
yes,
Horneman-Thielcke, yeah. Thank you very much, from Bioventures.
So my name is Tobias Horneman-Thielcke. I'm working with Bioventures as a partner there. We are a Nordic life science venture fund on 125 million euro, and we primarily invest in the Nordics. We are located in Copenhagen, Stockholm, and Connecticut. Myself, I'm a physician by training. Been working in the clinic before I joined the pharmaceutical industry, working there several years, both in big pharma but also biotech. And today I'm working with Haeger. So that's very nice. So the most recent investment we did was in a dermatology company where they're working with HS, hidradenitis, and they have a different approach trying to solve this very difficult disease. So it's a new way of doing things, which we find quite intriguing. So
Thank you. I'm very happy that you corrected yourselves from last investment to latest, or most recent. Thank you. Miao of Hadean Ventures, welcome.
Hi, my name is Miao. I'm a senior associate at Hadean Ventures. Hadean has office in Oslo, Norway, and also in Stockholm, Sweden. We are investing in the Nordics, but also outside the Nordics, within Europe, in other countries. We have 2 funds, and the current fund that we're investing out of, our fund 2, is around 140 million euro, and we'll continue investing out of that in the next 3 to 4 years. Myself, I'm a scientist by training. I did my PhD in Cambridge in the UK. Lived in UK and worked there for many years. So I used to be with the company Illumina in the biotech industry. And so in the last few years, I've been in venture. I've been with Hadean for a year and a half. We've made, I think so far, probably around 14, 15 investments in our Fund 1 as well as Fund 2. We're quite agnostic in terms of technology, so investing in therapeutics, diagnostics, medical devices, and digital health. And our latest investment was a digital health, digital therapeutics company called Alex Therapeutics. It's a Swedish company. They have a software tool to make use of regulating the behavior, changing behavior, and then to alleviate many illnesses with that. It's a new approach, and we're very excited about, I guess, the new approach and curing diseases in that way.
Thank you very much. Johan Kördel from Sound Bioventures.
Thanks for inviting me. So I have the pleasure of doing clinical stage therapeutics investments in private companies, together with Esther, Bibash, Kasper, and Thomas, and tomorrow a sixth person who is not disclosed yet. And we are a true transatlantic organization with people in the US as well here in Scandinavia. We are still fundraising, presently at 111 million euros. You can see the contest going on here. And our most recent investment was in a Dutch biotech company called Varmex that have a rescue medication for people that are on factor Xa inhibitors, and if they have a trauma of some kind, they can bleed out and die. And the only drug on the market right now, you have to titrate the dose, so it's got a black box warning. And Varmex has an approach where you could just use the drug itself. That's all I'm going to say.
Thank you very much. So we've had a number of years now in which there has been a seemingly endless supply of venture capital. Capital has been cheap with a zero interest rate, and public market funding has been plentiful as well. And it's safe to say now that conditions have changed a lot lately. So we'll talk about the key implications of that and funding venture capital driven companies, and also the implications for your respective funds. So, but since there are a lot of companies sitting here and also will be looking at this afterwards, I'd like to start by asking you guys, what would be your first key advice to a company then to seeking attract capital in the current market? If we start with you, Peter.
Well, I think this is the time to sharpen your pencil. You should never waste a good recession. And I think in this time, people that are evaluating investments will look very, very carefully. And I think the primary thing that we look at is, okay, if we invest now, can this team and this invention, these innovations, the science, will it hold up in the next step to attract international investors at the highest level? So I think to really visualize that roadmap and make sure that you could answer on the questions that will follow, that will be my advice.
To be prepared. That's something, a mantra that we've heard several times here today. So Tobias, what's your best advice at this point?
Well, I think it is to be much more flexible than the company has been recently. I think flexibility regarding financing, regarding clinical development plans, regarding teams, regarding where the company would like to go, the commercial perspectives. I think there are quite a lot of things that needs to be reevaluated, and that of course require flexibility within the company. So that is one very, very important aspect I think that the company should focus on.
But could it not be hard to be flexible when you feel that your money is running out and you are really pressed for cash?
Yeah, I think if your money is running out, I think then the plan, it's not just running out. You're spending them on something, and the value inflection points that you set up, if it's a good company that has been run appropriately, then you will also be reaching those value inflection points, and then you will have data to show. If you are in a situation where you're just spending a lot of money, but you're not reaching maybe the endpoints that you would like, maybe that's also a good time to reevaluate then again. Is this the correct way to go? Because then you need to do something else.
Thank you very much. Miao, what would your best advice be for companies then looking to attract capital?
Yeah, I think similar to what others have said, I would say companies just rethink about how to tell the story and explain well to investors how would you get to the next milestone, the next value inflection point with in a capital efficient manner. I think basically use the money to the right places.
And Johan, we heard from our keynote speaker earlier today that Nordic companies in general are very good at spending their money wisely. So what would your best advice be to companies coming to you?
Not really different from what my esteemed colleagues have mentioned, but be persistent and rethink what's not the fundraise you would like to have, what's the minimal that you could survive on to create the next value inflection point, which is, it's sort of a reset in the market, right? And it's not a secret that the venture industry have believed, or at least I have believed, that the valuations of Swedish private companies as a consequence of the valuation of the Swedish public companies in the biotech sector have been way too high. And now they aren't. Now they're actually too low. So I think it's a great opportunity for us. And if you are creative about what it is that you want to do, there is business to be done. We are fortunate, the closed-ended fund standing here, we have recent funds, which means that we have not yet shown ourselves as failures. So we can invest. We have the cash. You have to come with the good ideas.
And looking at, just judging by the program with lots of exciting companies that we've had presenting here at the summit over the 2 days, I would say that there is no shortage in supply of ideas. So have you seen, Peter, less or more companies coming to you in terms of the deal flow that they try to approach you? Is it more or less companies coming at this point?
I think listening with my colleagues, we have a significant increase in deal flow. We see many more ideas and lot more companies come to us, and we expect that to continue. We think this is an interesting time for us. We're getting to see many of the good ideas, and we're having time. We can discuss with the teams. We can influence the teams also on how they maybe sharpen their cases. So we think it's super interesting, and we're very ready to act in the situations where, as Johan says, where we can find alignment on the roadmap, on valuations, and how to develop the companies. We think this is exciting and a lot of deal flow.
I'd like to touch a little bit later on the subject of valuation, but first, Tobias, do you also experience an increase in deal flow and ideas?
Yeah, absolutely. So basically, we are getting flooded, right? And of course, that is it's nice for us, of course, because it gives us, or it provides us with a lot of opportunities, but there is also some bad things with it, because it also makes us maybe select quicker, to move something away that maybe could have been interesting, and that's bad for the companies, right? Because then they need to figure out a way. I think Jonathan, he also talked about it in his talk, that you need to make you aware of yourself in a different way, so that we as investors can actually see what is interesting within the specific things that you are doing. So I think just sending an email to us with a presentation, I think that you need to think differently today to find some tractions with investors in a time where a lot is going on. So I think that's one important thing.
And Miao, at Hadean Ventures, is your experience similar? And what would you then say to companies if there is a flood wave of cases coming your way? How should the companies act to sort of stand out in the crowd?
Yeah, I think similar to my colleagues, we see more interactions from companies. And I think it is great because keeping us busy, and there are a lot of exciting ideas. And many of these cases we find interesting. But also I think there's because there's limited headspace, I guess, within your investment team. So you want to, I think the companies would be best if they could, keep your key points, your shiniest points at the top, so that they get into the headspace of the investors. And I guess at the time also feel that maybe because at this one time you have a lot of companies you're evaluating at the same time, so maybe you're not as quicker in kind of responses or doing questions or due diligence. So that's one other aspect. Basically, we're still investing, but the decision process becomes longer because there are many processes ongoing at the same time. Yeah.
Johan, it seemed to me like you had perhaps a bit more to say about the valuation situation. What's your view on the management?
I was going to come with advice on how to get through to us.
Okay. Well, let's start with that because I'm sure.
Well, I mean, when you do a deal with a big pharma or some company, right? You need a champion. So you need a champion when you talk to us as well. So don't send emails to 2 or 5 of us. Figure out who it is you think is going to carry your idea into a venture fund, and single that person out. And something we really hate is when you call us. But that's how you get through, right? If you don't get a response over email, which I think you do from us, but certainly not from all venture funds in the world, call people. That will get a reaction, right? What was your question?
No. Good answer to my non-existent question. But how do you see? What's your view on management teams and owners' perspective of valuation when they come to you? You have your ideas, they have their ideas, and you're right, of course.
So Jonas and I have discussed this before. So you, as entrepreneurs, you should, of course, take money where you can get it, and as much as you can get. But, as you know, some of that money comes with negative side effects. Our money comes with some negative side effects. We want to have some level of control and influence on what you do. If you go to the public markets, for those of you that have, well, now is a difficult time for you, and you need to figure out how to get through that, right? So I, as a primarily private venture investor, I think it's great that the market has come down because the valuations are now such that we can talk about creative ways of helping you moving forward, as long as you're prepared to do it in a private setting.
Sorry, I get this picture in my head where you sit behind your desk like this when the companies line up.
No, but I walk up and open the door and say, come in, we will help you some way.
That sounds great. So much nicer than picture. Is that something that you would agree on, the fact that there is some more sensibility now or humbleness in approach to valuation? What's your take on that, Tobias?
I don't really completely agree. I think the valuations are still quite high. I think it's, and I don't agree that I don't think that we come with negative side effects when we offer a term sheet. so I think.
Can I break in and say, have you had discussions with entrepreneurs who don't want to have preference shares, who don't want to have 8% interest rate on top of that?
Never happened.
I think you should. Like, at least I see it in a different way, and I've also been an entrepreneur. So I think that when you go out because you don't have either the money or either the competences to take the company to the next level. And one of the things that I think we provide is much more than money. I think that we provide also a strategic direction and resources that the company is not capable of coming up with in that current situation that they are. And at least the companies that we are working with, I see this much more as a collaboration. So there should be something in a journey for everybody, also for the founders. But it's very easy to be very focused on what the founder, I did it also myself when I did my own company, but what you will lose instead of looking what you will gain by the things that you are doing. So I think that is super interesting or super important as well to have a focus on, because I think we create a lot of value in the companies that we are working with. At least hope so. That is the feedback that we get, and we can see that they evolve over time and reach the things that are the valuable inflection points that we set up together with them. So I think or at least I hope that is the thing that we managed to do.
So having a strong owner base or a strong institutional investor is obviously a positive thing when you seek new capital. So, but Peter, at Industrifonden, you take an active role as owners, but not operative, right? Is that what other advantages do you come with, or negative side effects for that matter?
Well, I think I would focus on the positives and agree there that I think it's a partnership that you're entering. You really want to develop the company together. This first negotiation, it's not the end of what will happen. It's the start of a journey. You have to build the company together, and it will show over time also in the team, in the founding team, in the people that you recruit. Very seldom we see a founding team that is complete, and I think you need to recognize to build these companies, you need at least 10 different functions, and you need to build those functions with really skilled people. You need to do it over time. You need a strategy, the ability to develop a roadmap, and I think that is exactly where we and our colleagues can add a lot of value. We've seen that done before. We've seen the pitfalls. We know people. We can add our network. We can add a network of our network, and I think that brings a lot of value. And it's not, those negotiations are not one-sided. I think we see founders still with very high expectations of valuations, and we see founders that sometimes we feel, oh, that may even be too low. We have to look out for their incentive in these negotiations. So I think if you have an open mind and are not totally fixed on last year's valuation or last round, I think there are ways to find instruments, and also over time, if you see that dilutions will be heavy, we will work with incentive systems to make sure that people will have good upsides. So it's a partnership. We need to work together, and you need a lot of skills to bring these companies to success.
Just to follow up, I think it's a good comment, because you don't want to remove the incentive for the company. Then it makes no sense. Nobody will run after nothing. So it's super important that they have the incentives to keep on creating and keep on executing on the plan. So if that's not present, then you made too good of a deal for yourself. And that I know that's for all of us. That's not how we want to do business, because it's basically business that we do. We want to make sure that every part is satisfied with the agreement that is there.
I realized that I never answered your question. Maybe that wasn't so important. Anyway,
I didn't know.
We're not taking operative roles. So we're taking an active ownership role. We're in the board to guide, and we're helping to populate the team from board level and to build networks with investors and also for operative roles. But we are not doing the operative work.
Is that any different for Hadean? Do you also take an active role, or what's your?
Yeah, we're quite active investors. We also like to be involved with companies' development. So of course, we are taking part in understanding, of course, and agreeing with the company's plan, and being, of course, informed about the key developments. And when there's exciting data coming out of the company, of course, we're all really looking forward to learning about it and think about what the next steps is. And then I guess, yeah, it's very similar to what my colleagues have said. It's a teamwork, and then making that investment is the first step of that. And then you have to be, there is that level of trust, and you build that you can work with together, and it's for a shared goal. On valuation, I think one thing I'd like to add is when you're raising money, I guess as an entrepreneur, when you're raising money for this round, there's also like maybe following rounds you had to think about. So then if the valuation is very high for this round, but then later that could make it a big hurdle to jump for a lot more investors. And because the nature of this financing is that VC firms tend to syndicate, right? We will hope to bring other colleagues to give more capital to the company in later rounds, and then if you have a reasonable valuation, and then you'll be able to hopefully attract more potential investors, as in more people would be willing to open to Elevate to help develop the company. So so I think there's that point as well.
Good point. Johan, you're touching upon earlier the fact that the valuations in the public market also affect, or well, that the private valuations sort of follow on there, or they are they correlate. So to what extent? And also interested in knowing that since the IPO window now has pretty much been slammed shut for a while, does that affect investors' willingness to invest in your fund? You mentioned you're still fundraising, so is that something? Is there an exit option that's gone away there?
There's so many levels to that question, but I think the limited partners, as we refer to investors in venture funds, they right now are waiting to see what happens in the Ukraine and what happens with the recession. So they're not gung-ho about investing in the private equity market. Their holdings in the public market have gone down in value, so the percentages have changed, and as a consequence, they're holding back private equity. And healthcare venture is sort of at the very end of private equity. So we are fortunate that we've been able to raise funds over the last couple of years before, during the pandemic, but before the war. But coming back to your question about what you get from having wonderful people like us, you get similar things, and you get active ownership, and you get our network. And in our case, we hope that we can bring more of the American knowledge and money into your companies by having us involved, since we do have a managing partner on the East Coast in the US working full-time for us.
So the changing conditions then that you mentioned that could lead to certain decisions being held up and so on. Is this something that that your respective funds have been strategically then adjusting to the decreasing risk appetite in general with investors? You want to go first? Sure.
So I think this comes back to part of your question before. So we have never liked, and I mean, I'm on my 13th year in venture investing, we've never liked stories where you have to go public in order to get to a point of development of the company or the exit for the investors. So some of our companies have gone public because that was the right thing to do at that point in time. So we still have that view. And as a consequence, since our primary objective is to invest in companies that stay private, we're just as happy and we have the money, as we said, all three of us here. Or Industrifonden always has money, but...
Obviously, otherwise you wouldn't be here. Sorry, Peter, is that you have the same view on that?
Well, not quite. I would say that it has changed. I think there are certain perspectives that are different now than a year ago, since the risk appetite is different. We know that syndication and different type of syndication partners may not be there. So I think syndication is a lot more important right now, and to see that each story is fundable, both now and when they reach their milestones. So I think we are more diligent, and we're looking for stronger syndicates.
Anything you want to add there, Miao or Tobias?
Well, I think with the syndication is like it's a validation of your own thoughts, right? That somebody else can see it, and that is quite important. So how we risk mitigate? Well, I think we have the privilege also. We are pretty early in our funds, so we have a long perspective of 10 years from now, plus minus, and that is a good situation to be in. But you also want to have a diverse portfolio, of course, where you have different kind of stages. The companies are in different stages, and some of them are early and some of them are late. And that is also how you risk mitigate, and then also within the different therapeutic areas. So some of them are maybe higher likelihood because there has been a previous proof of concept or something. Then that is a higher likelihood of coming to the milestones that you wanted, and the others are maybe more like innovative and so. There are different things that you can do.
Yeah. With regards to whether strategy changed, no, our strategy doesn't change in the current market, and we always look for very exciting companies in Nordics, in regions where we think have interesting science, but kind of lacking, I guess, under-ventured is the term to say, so we continue to look out for these companies. With regards to, I think, because the IPO window is not there, and don't know when it will open, and that would probably makes when we, for example, when we do diligence on a company, we'll probably think harder on, okay, if there's in the foreseeable future, we don't know whether there is a source of capital from the public market. Then what are the extra kind of comfort we get to understand whether how attractive this company could be potentially in the eyes of a potential acquirer from a farmer's perspective. So that's something we probably give extra consideration on. But overall, I think. Maybe the speed of doing deals are kind of slower than before, but there's definitely exciting companies being invested. It's happening at the moment. Yeah.
And speaking of speed, I noticed that our time is running out. But I would like to ask a final question. If you could keep your answer very short and swift, that would be great. Last but not least, why should a company then welcome your fund as an investor, Peter?
I think there are two good reasons. One is we're an evergreen fund, so we're in it for the long run. And the second reason is really my excellent colleague, Fredrik Lehmann, over there, that is heading our life science practice. Speak to him and you'll understand why.
Thank you. Short and sweet. Tobias?
Well, I think we're a pretty cool team.
Great argument.
Exactly right. So, and that's important. I think we see this as a collaboration and where we work together, and I think that that's a good approach. So we come with the right expertise, and we help out, and where it's important. So, yeah.
And you have a nice groove, which is great.
Yeah.
Miao, what's your final selling point?
We really care about exciting science, and we science focused, and we really care about bringing products to patients that really matters. And we are I think nice people to work with. We really use our resource and network and our experience to bring help to companies where needed.
Thank you. So, Johan, we have cool people, we have nice people. What kind of people are you at Sound Bioventures?
We actually have as one of our value words to be decent. So we are decent people. It doesn't sound that good. So we have, most of us in the team, actually been CEOs at one point. So that's not necessarily different from the rest of the people here. But we understand operational questions. So in the board, you might have people that have excellent backgrounds for you from the finance world or from management consulting. They know nothing about running a company, but but we do. And then it's the American network, both to people that you might want to collaborate with, you might want to sell your company to, or you might want to get financing from. And that's something we think we bring in particular because of our backgrounds.
Perfect. Great final words. Thank you very much, all of you, for joining us today and for your valuable insights. You will, of course, be available for the networking session after this as well. But give them a warm hand. Thank you very much.